Kris Krohn here with Have It All, and today I've got Mark Kohler in-house to have the conversation of why you should buy a rental every single year. But Mark, you're not coming to me as just a real estate investor. You're a lawyer, you're a tax CPA expert. So you're what they call like a tax lawyer. That means that you got both of these certification degrees and they give you like a very unique perspective on the game of real estate investing.
Yeah, and when people see my credentials at a party, they try to avoid me.
Okay.
And then they find out that I make them a lot of money, and then all they want to do is talk to me. So it can work both ways.
Well, and you own a number of really fascinating companies. Like you're a big fan of taking IRAs, 401ks, self-directing them, putting them into real estate. You've got more than just a little bit of money under management right now, right?
Yeah, this year at directedira.com we'll hit $2 billion in clients' money that we've deployed for them because it's their money.
Wow.
In real estate all over the country.
Okay, so this is actually part of the reason why I want to have a conversation with you, because most of the guys that I know that are trying to help convert people's 401ks and IRAs and self-direct them, it's because they want to kind of hang on to it, earn their management fees. You're doing the opposite. You're like, no. You got to put that out into the game of real estate. You got to take care of yourself.
Yes.
You need to become an investor. Why are you such a big proponent of helping people do that?
Well, for 20 plus years, I've lived the 10,000 rule. I've done over 10,000 consultations with clients around the country, building their tax strategy, their legal strategy, and you see common themes. People that are screwing things up, people that are killing it. Every one of my successful clients own passive rental real estate. They do. I've learned it. And it saves taxes too.
Wow. So you own real estate yourself, and you're basically telling everyone that this is what they should do.
Yeah, yes, as part of your overall plan. But no, yes, I am. I'm going to be so bold to say real estate has got to be a part of your portfolio. So, how much, whenever, blah.
Something smells a little bit funny. Like I'm kind of smelling maybe that you're not a huge fan of Wall Street.
I hate Wall Street. Okay. They are blood-sucking parasites on our economy, and we need to take control and buy hard assets, control our own destiny. I love the side hustle of America. Half of working Americans now have to have an extra job, and those are side hustles. People, those are small businesses, and owning real estate is a small business.
Got it. So we're basically coming from this same thread that Americans are in trouble in general. It's interesting. The government just came out and said, hey, we're celebrating that after 2 years, we've been able to bring inflation down to 4%. Pat us on the back. We've just made life easier for the average American. I'm like, 6% interest rates, the inflation that has taken a toll, 62% of Americans that are check to check. I mean, people are financially in a really bad way, especially, I just read this statistic that said you have to make $139,600 a year just to qualify for a median $440,000 home. And guess what? 90% of Americans can't. Wow. I mean, we're in trouble right now. And I think part of it goes back to this systemic problem that people are trained to have a career and make an income, or to own a business and have an income. And I'm like, listen, an income is what's hurting you. You need more than one income. And real estate has done that for me. I know it's done it for you. Yeah. So you come at it from a unique perspective, right? So you're coming at it from the legal, you're coming at it from the tax, and you've had consultations with 10,000 different people. You're at the height of your career where $2 billion of money under management is a very, very big deal. What are the top reasons that you're encouraging people to buy real estate every year? And by the way, 2023 included?
Oh, hell yeah. Hell yeah. You got 6 months, people. You got 6 months. Every one of my clients.
Like, why should someone do this?
Well, it depends on, everybody's got a little different story, so we could throw out different avatars quickly. One, some people need the tax deductions. They'd like to go into a short-term Airbnb, show material participation, get a big tax deduction.
Can we break that down? Like, what do you mean? Like, can we do an example here? Like, are we talking about, like, let's just play.
Okay.
I have a $500,000 Airbnb. It's just a basic property, and I'm doing Airbnb with it. How is that going to bring me some kind of tax benefit if I buy this?
Okay, assuming that you qualify for the material participation, which we could break down, that's a whole conversation, not that hard. But assuming you qualify, and most people can. Okay. This weekend, I made 2 offers on 2 Airbnbs in Scottsdale, Arizona. I'm in the game. Yeah. I do what I freaking preach. So anyway, the benefit is you've got a $500,000 property. We're going to allocate 20% to land. That means we've got a $400,000 structure. Once you qualify in the short-term rental material participation. You don't have to be a real estate professional, folks. You don't have to have hours of 750. You don't have to be in the, you can be a dentist and do this, but you have to hit 100 hours on all your Airbnbs between now and the end of the year and being involved. Once I hit that, I can cost seg that building, probably generate about $150,000
about 30%,
deduction,
right, on that 400 grand.
Yeah, against all other income, against my W-2, everything.
So real quick, I make, let's say, $130,000 a year, and that puts me in a certain tax bracket. We can guess a little bit what that is.
Okay.
If I get $130,000, does that bring my income to zero?
Yes.
And that means that I owe nothing in taxes.
Yes. So in fact, you're getting a refund, baby.
Okay, I'm getting a refund. So you're basically
to go buy another rental.
Okay, so but now, by the way, the first 7 years that I invested in real estate, I didn't know taxes. Okay. I wasn't sophisticated enough in my 20s to understand why. But after a while, I finally sat down with my CPA and he said, "Well, Kris, you realize that even without cost segregation, which is an accelerated depreciation, you realize that you get to write a property off over 27 and a half years." And I'm like, "Well, what does that mean?" It's like, "Well, you just bought a $200,000 home, and you take that and you divide it by the 27 and a half." And he said, the write-off that you get every year, let's call it $7 grand, that's bigger than the cash flow you're getting on it, which means your cash flow is all tax-free. And then there's leftover money that writes off against your income. And he said, because you bought enough properties, it's written your income down to basically nil. So what that means is, this is weird. You're making all of your job income, all your cash flow from all your properties is tax-free, and you don't pay taxes on all of the money that you've made.
And some tenant is paying down the mortgage for you, building equity, and I'm getting appreciation. It's like a quintuplet of just craziness. Now,
I got to make sure that no one just lost what just happened real fast there. You're earning tax-free cash flow if you invest the right way. Someone else is paying off your mortgage. I call that principal reduction. That's like outsourcing the elimination of debt. By putting a tenant there, they're paying off your house. By the way, my ROI on that averages out on average to about 5% a year. So when I claim that I'm never going to touch real estate unless I'm making 25% a year,
it's a combination.
It's a combination.
Yes.
Part of it is the principal reduction, some is the cash flow, and some of it is the appreciation.
And number 4 is the taxes, baby, that no one understands. And I love to crack that code.
Yeah, it's kind of complicated at first. And I think when I was young, I ignored it. And I got to a point where I'm like, I am hurting me by not understanding. And when I finally said I'm ready to understand, wow, did that motivate me to go buy more?
Yeah. And by the way, this is not an infomercial, but I'll say it now. If any of you are like, well, where do I learn it? I've got a podcast with almost 3 million downloads. I've been doing it for 15 years. I was doing it before podcasting was cool. I was hawking it in a van down by the river. The thing, people, it's not that hard to learn. We break it down so simply. My co-host, Matt Sorensen, we love to talk about the tax planning, and everybody's a little different. We are oversimplifying. You might have situations where you don't qualify for the full write-off, but you carry it forward. You can sell other property tax-free. I can avoid a 1031, or I'm going to accelerate. But it's easy to get these principles down, and people, you captain your own ship. Just learn enough to smell when you have a bad CPA. We've got accountants we network with around the country to help people find the right accountant that is taught the Mark Kohler way, and then they're kicking ass.
And can I just tell you, like, while taxes are accounting, they're even complex to CPAs. And I want to clarify, maybe with different language. You disagree with me if you need to. Okay. Yeah. When I hear you say bad CPA, I think this is unintentionally an unknowledgeable person that doesn't know how to stack the decks in your favor. They're kind of doing the basic H&R Block thing. And instead you're saying, hey, pursue interests like real estate investing so that you can intentionally put yourself in a position where you're making more money, it's tax-free, you're getting tax benefits, your assets are growing over time, and someone else is eliminating your debts.
And there are accountants. It could be an enrolled agent, a simple accountant, a CPA. I certify accountants around the country in strategies so they know what they're doing. But it's interesting. Think about it. Who are the kids in high school that didn't want to communicate, that were the most conservative? Where did they go? Into accounting. They thought that was their lane. And everybody's like, great. Now they're controlling the number one cost in your life. The people that are poor communicators generally, the most conservative, and don't want to reach out and take action. And so you got to take control of your ship and go, no, we're going to go this way. And if you don't like it, get the hell off.
Yeah. So one of the reasons, guys, why I've got Mark here as a guest is because not only do I really align with his philosophy, I was on his podcast, and as I gotten to know him, I'm like, oh my gosh, the world needs to know Mark Kohler. And before we go deeper in this interview, there's going to be people listening saying, I don't know if I've set up my entity structures the right way. There's going to be people saying, what if I want to pull my money out of the 401k and IRA and self-direct it tax and penalty free so that I can go into real estate? What if I want to learn more of Mark's philosophy? Or what if I want to make sure that my CPAs are doing it the right way? How does someone learn more about you?
Okay. Well, thank you. I'm going to say the first big action item that everybody could do is get a consultation with a real tax lawyer. I've got 14 of them helping clients around the country.
Where do they go to get that?
You go to KKOS Lawyers, KKOS as in Sam, lawyers.com. Sure, it'll be down in the description. Make an appointment and do a review. Yeah. Look at your last year's tax return, build an action plan for this year, and the attorney's going to bring this whole thing together. People, we're talking under $2,000 to get a whole plan to put together. We don't have these 5 or 10,000 bullcrap things and set up unlimited LLCs. Sometimes we take clients and get less entities. Well, let's get organized.
But you also like take people off the streets. You do a lot of privacy planning, estate planning.
Oh.
And it's like, I got to a point with my wealth where I'm like, I want to be unfindable, right? Meaning we just live in a very litigious society. You know this above all because you've had your law firm for how long?
22 years.
And so you get it, right? And so it's just like the more successful you are, you get a target on your back. That's not a reason to not do something. It just says you need to be smarter than the average bear.
Yeah, and you got to bring it together. Yeah. This is the beauty. When we're when we do Zoom calls with clients all day long, all around the country, don't worry about where you're from. It's affordable. Get it done. And it's interesting. We're going to be looking at the tax piece and at the same time, flip the paper over or look to the right and go, ooh, what are we doing for privacy, asset protection in your estate? Because we want camouflage and protection. Yeah. So a bulletproof vest and camouflage have 2 different purposes, and you want both. And you can do it affordably. Yeah. It's not that bad.
So I want to lean back into this real estate conversation because, with $2 billion worth of real estate investing experience and having transacted 6,500 homes, most of the time I have clients that are happy in my partnerships where we're just doing typical depreciation. But recently in years, I've started doing a lot more accelerated depreciation because you
need the write-offs.
I need the write-offs, and my partners need them as well. Mm-hmm. And so what for you philosophically is more important, buying real estate for tax write-offs or buying real estate to grow your assets?
Okay. To grow your assets or cash flow. And here's the thing. I hate to, you're going to love this quote. I hate to let the tax tail wag the dog. Huh. People were buying at the very beginning.
So you're saying it's not for taxes first?
Not for taxes
it's
first.
Like you got to grow your wealth. This is how you take financial control of your life. You told me earlier when you came in studio something about Main Street, and you're the what?
I'm the Main Street tax pro. We got Main Street tax pro. I love Main Street America. I hate Wall Street. Main Street America is starving for good tax and legal advice, and they don't know where to go.
Dude, do you know how hard it was for me to find you? Do you know how hard it's been for me to find really good advice?
I've been out there trying. I know I'm bad at it.
I'm really upset at you, Mark. I should have found you.
Okay, now you asked me at the very beginning, Mark, after 10,000 consultations, why do you tell people to buy real estate?
Yeah.
Because the ROI triples or quadruples whatever you're going to get in Wall Street. People, it's a long-term game. It's not a get-rich-quick scheme. We're buying real estate because it just makes freaking sense. Then, if I can get a tax benefit out of it, hell yeah. Some of your partners won't. Some will. Yeah. Everybody's situation's different, but it's incredible.
So I'm holding $50,000 for those of you that are just listening to the audio right here. This $50,000, when Mark says that you can get triple or quadruple, my experience is that if I can at least be earning 25% minimum on my real estate, and I compare that to the average. When you combine 401ks, IRAs, the S&P, you're basically sitting at a 30-year average around 6%. Mm-hmm. And that 6% is about a quarter of 25%. So you're like, oh, does that mean that you're making 4 times more money? Well, with compound interest, it turns out that single digit doesn't compound meaningfully. It takes lifetimes to get somewhere. But when you enter double digit ROIs, 25%, it's 4 times the ROI, but over 20 years, it's 27 times the money.
Really?
Yeah, and that's the power of compound, right? I actually average 34%. So it's over 100 times more over 20 years. So I can't put my money in 401ks and IRAs, and that's really, everyone knows that that's the pulpit that I'm constantly pounding.
Okay, no, I'm going to correct. We can go with each other. I love you for this. We don't mind putting our money in 401ks and IRAs. We want to just let your 401k and IRA buy real estate.
I know, but that's the difference.
It's still tricky.
That's what you're saying. Because this is where I go toe to toe with Dave Ramsey.
Yeah.
Where he's basically do these things and keep it in the market.
Keep it in the market.
You're saying do these things Though they're actually really great strategies as long as it's not in the market.
Yes.
Yeah.
Yeah. Think of a 401k or IRA like a sports car.
Yep.
And you get to decide who's in the back seat.
Yeah.
So I want you to have the car. 401ks are not bad. IRAs kick ass, especially the Roth. We just want to make sure who's in the back seat, and it ain't Wall Street.
Yeah.
It's that 30% freaking piece of real estate you're making
So
money
in my
on.
book, Have It All, it's interesting that you say race car because I think it's a race car, but I downgrade it to a front loader when it's doing its 6% boring no thing.
Oh.
Here's the irony, though. That there's going to be people, Mark, that are listening, and they're going to say, "Yeah, easy for you guys to say, right?" Like for me, don't you understand that you're talking about risk, and my partner is going to have an issue with this risk. You're asking me to take risk. Isn't it just a lot easier to do the 401k and IRA thing? Shouldn't it work out? Won't I accumulate enough over my working life? I mean, that is the biggest argument, Mark, that I find from traditionalists when they hear, frankly, my philosophy or your philosophy is how much more risk really is in this game of investing in real estate.
Okay, I'll say two things. First, I'll say, sure, it's easier. Don't do it. And see where you're at 10, 20 years from now. Do you know how many consultations I have with people over 65 years old that call me up and go, Mark, I'm still working. What do I do?
Yeah.
I'm like, well, what were you doing 20 years ago? Were you taking a little bit of risk? And we got to, and then at the same token, I want to say, we're going to be careful. We're going to be well balanced. Kris did 6,000 transactions. Do you think he's learned something too?
Yeah.
Do you think he's going to go out and stick his neck out there and screw up? Now, there's going to be good and bad deals, but you want to reduce that margin of risk with knowledge, careful planning, strategic analysis, and that's what you're great at.
Well, the calculated risk steps in when you start looking at all the worst case scenarios and plan for them. Mm-hmm. You know, when I buy a piece of property, I set up a sleep well at night account. I know the aggregate amount I need in an account to help someone sleep well because it's enough to manage the property. When I buy a simple single family property, we put 10 grand in the account and say, hey, this is what we're going to use to pay mortgages. And at first you're thinking, but Kris, my mortgage is, $1,200 a month. Why do I need 10 grand in the account? And I said, well, you'll see. When your risk tolerance, adjusts, we can lower that amount. On the second property, we add 5 grand more. On the third property, we add 5 grand more. They got 20 grand sitting there. And then, 9 years later, a roof needs to be redone or whatever. And when there's a cost and insurance didn't cover it, there's no panic because the money was in the account. Or what happens under the really weird, I can tell you statistically the chance of 3 properties being all unrented at the same time. And I can also tell you in this market, in that county, that it's an average of 24 days before the renter is back in. But let's multiply that by 5 for a worst case scenario across the board and make sure we have enough money in the account. So there are ways to mitigate the risk. They are actually known. A lot of people don't understand what an actuary is. It's when you have data from all of the statistics of what you do so that you can make informed decisions. That exists, and a lot of people don't know that because in real estate, Mark, they're doing it kind of alone. And that's kind of scary.
It is. And I buy real estate. I freaking made 2 offers this weekend on real estate, as I said. So, and I'd like to go down that rabbit hole, but I'm the tax guy, so let me add another twist. Let's say you buy those 3 or 4 properties, and then, 10 years or 20 years, did you say, down the road? Guess what's happened, people? Those are businesses. When you go to visit that rental, we're writing off travel, we're writing off auto. I want your kids involved in your business. All your kids should be getting paid, and they're going to be getting paid tax-free 9 times out of 10. We're going to be building a bucket of losses that carry forward, and then in 10 years, you're like, I'll sell property number 3. Okay, tax-free. Because all these losses get carried forward. And so you're building a tax strategy. At the same time, you're building a wealth strategy. And you're creating tax-free cash flow. And that's risky? It's too risky not to do it. Are you kidding me?
No. So 100%. So what you're basically saying is for anyone that is not investing in real estate right now because they've been too scared, they're uninformed. And that when you allow yourself to really get informed, the game kind of changes for you. My second property that I ever bought, that I bought as my first investment property that it was non-owner occupied. I remember in the 3rd year, I needed to remove a tenant, put a new one in, and I remember when the house needed like $8,000 worth of work. And for a moment, as a newer investor, I was kind of panicking inside. I'm like, oh my gosh, I didn't have rules back then about how much money to keep in my account. So when I shelled out $8 grand, I remember in that moment, I was pissed for about 3 weeks. But if I fast forward 8 years later, I sold that house and made $138,000. And it was in that moment that I got paid that I realized, oh, I should have never worried about that $8 grand. I should have never, because I didn't know what I didn't know.
And let's talk about risk too. We're buying hard assets. The cool thing, people, is even if you bought a property in a partnership with Kris that broke even cash flow, is building equity.
Yeah.
You'll get your money back and then some,
Yeah.
even if there's some bumps along the way. And people, again, this is what rich people do. You want to call me and pay me thousands of dollars to tell you something? This is what rich people do. I just gave you the secret.
Yeah. And I think, there's a lot of people that will find me on social. They'll talk to my team after they've watched like 1,000 videos and they're like, whoa, Kris, you have the track record. You've done this for 20 years. You were crushing in 2008 when everyone said it was the worst time to be in real estate. And they basically say, I want to partner with you. Can I put up money from my 401ks and IRAs? Can I self-direct them? Can I do some of these things? And when I say, yeah, it's interesting. They give up some equity in the partnership to bring me in. But what I bring them is peace of mind, so that they don't have to, they're so passive, right? Yeah. The last thing they want to do is wake up to a nightmare of not feeling prepared or feeling like I didn't mentally know how to handle that hurdle. There's many investors that are new to the game of real estate. And then when something doesn't go according to their plan, because all real estate deals at some point throw a punch in your face. And in that moment, you think it's a bad thing. But unless you have the long-term perspective, in 9 out of 10 situations, time will solve it and make that a beautiful thing if you stay in the game. Too many people don't stay in long enough and pick up the compounding effect because they're going it alone. They're mom and pop shopping it. They're lone wolfing it. And I always tell people in the beginning, and I do this, by the way, in all of my businesses, I look for partners. I say, you know what, I can't afford to allow my lack of experience to take this down. So I'm always looking for someone that's knowledgeable and experienced, because they're going to save me from the real pitfalls and trial and errors that will keep me from ever taking the right kind of calculated risks.
Totally agree. And if you're in your 30s or 40s and listening to this, folks, and you've got a day job, corporate America, we're not saying quit your job.
No.
What I'm going to tell you right now, take advantage of Kris. Abuse him. Because here's the I meet with engineers, accountants, lawyers, doctors, dentists, corporate America, and they're like, I want to get in real estate, but I don't know what to do. Okay, what you do, go partner with Kris, learn on his dime.
Yeah.
It's okay. You're not going to lose.
I've only spent, by the way, I've lost my $1 million in real estate, and then I corrected it, and then I've learned from all these things where it's like, oh my gosh, now it's just a locked and loaded machine.
Yeah, Kris is your gateway drug. Just spend time with him. Learn it. Yeah. 5 years from now, you want to knock yourself out and go buy property next to your grandma, write off even more? Great. But learn the basics. And I love your program of helping people get out of Wall Street and just starting this gateway drug. That sounded really bad.
It does. It sounds like great, but you know what? Maybe I'm that great kind of drug. I don't know. Listen, brother, I'll tell you that you have the level of knowledge that people need. They're entering the arena, that when they're serious, it's important that you have the right legal team. And I love that you are so Main Street that you're not charging like the absorbent and crazy fees for doing really basic but necessary things for proper setup, incorporation, and protection.
Yeah. And lawyers can be expensive. I know many of you out there, when you're like, man, I'm going to pay $15 to $2,000 to meet for a couple hours with a lawyer, put together a plan, analyze all my stuff. But in the end, if I don't save you 10 times what you paid me, you know what, people, sometimes it's easier to save money than make money.
Yeah.
And you can start drinking the Kool-Aid. My Main Street Business podcast, my newsletter at markjkohler.com. I've got a downloadable ebook for my top 30 strategies. You can download that right now. I'm not saying it's all or nothing. Just start learning this. Like many of you that are already consuming Kris, get over to Mark J. Kohler. I've got my silver play button like Kris over there. People, you got to send this to your friends, because you got to get some more. He's going to get his gold play button for me. I'm so jealous.
Right around the corner. I did it first on TikTok, and all the others are passing up YouTube, but it's okay.
Yeah. No, it's so exciting, people, because there's so much opportunity to control your future. And once you unlock that and realize it, it's not risky. It's more risky not to take action. Yeah. It's scary.
Mark, this has been really great today. I think you've hit the basics hardcore in a beautiful way. I want to ask one more question, because it's a curiosity on my mind. I know that you can unlock crazy next level tax benefits if you're not just a real estate investor, but do enough of it that you can be reclassified as a real estate professional. And that's not... those aren't just adjectives of like, oh, that must be someone that is in the game of real estate that's a pro. No, this is actually a specific IRS designation. Can you briefly talk about what that is? Because when I earned that designation, that completely changed my tax situation. And so I know a lot of people that will send a spouse into real estate to become a realtor or do something, because that designation will actually save them a ton of money in taxes. I just think it's a final gold nugget to drop where we get to go advanced for a hardcore minute. What is a real estate professional, and why would someone want that designation?
You bet. And a real estate professional is going to be is a loaded term, because think of a realtor. Maybe even some people people may call a contractor a real estate professional. They're working in real estate. That's one type of real estate professional. We have tax strategies for them. We want to save them on self-employment tax. But when you become an investor, there's another category of real estate professional. It's almost like A and B. And so we've got to, and this is where just a little bit of education, just what people you're getting here. It's not that hard. Just pay attention. I could be a realtor, real estate professional, or I could be an investor with enough properties that I'm involved, and I could still hit the classification of real estate professional just by holding rental property. Now, once you get that, people, there's 3 tests that we want to nail. 750 hours a year doing real estate. It's about 13 hours a week. Number 2, my main occupation is in real estate. There's 11 categories laid out by the IRS. I've got blog articles on this and blah, blah, blah. And it's one of your first strategies. And then number 3, you've got to materially participate to some degree. Once you hit those 3, or your spouse, and Kris, freaking, that was a nice drop you put in there. Because if your spouse qualifies, you both qualify.
Yeah.
So this is where I'm setting up a website called taxmatch.com, where I want to put boring chiropractors with cute realtors, and it's tax match and made in heaven. It's unbelievable.
Oh, you're hilarious. You're gonna be like, hey, are you a real estate professional? If so, we should date.
It's a sweet pickup line. I mean, there's thousands on the table.
And what happens when someone hits that designation? What are the benefits?
Okay, so when you're a real estate professional in the investor classification, and all these losses from depreciation, whether you accelerate or not, whether you do cost seg or not, all that depreciation is now deductible 100% against your day job, your retirement income, and other passive income, any type of income. So it turns all those real estate losses into an ordinary deduction. And that's the holy grail of the real estate investors. Now, everybody listen, I'm not saying rush out and be a real estate investor tomorrow. Start your plan. Once you get 3, 4, 5, 6 or more rentals, you're starting to understand the game. This is where we're headed. We want to build that 5 or 10 year plan so that, folks, you've got that passive income that's rocking your world.
Well, because at some point when you've built enough wealth, you're no longer spending time for that money. You're now earning it passively. Mm-hmm. And so it's inevitable on someone's financial journey that figuring out how to cash in on the passive losses is going to become a prime directive. Yeah. And real estate professional is a designation that can make that happen for you. And it really just caters back to this idea of having a plan, right? The first step of the plan, just buy a property this year, right? Start the game of accumulating for all the benefits that we've talked about. And then at some point you have a chance to go more advanced because you're right. Sometimes you can make more money in what you save than what you earn.
And see, folks, it's also about being constantly ahead of the game. It's not like you're going to listen to me for 3 podcasts and go, oh, I got it all. For example, right now, this exception, a loophole, if you will, with the short-term rental game, you don't even have to be a real estate professional. Yep. So I can take a dentist in Minnesota, buy 3 short-term rentals in Costa Mesa, California, cost seg the hell out of it, and get a $500,000 write-off, wipe out their income, save them big bucks, and now they're creating passive income with short-term rentals. Now they bring their own set of rules, and you got to learn and all that. But people, that's just one strategy. Then the self-rental. I'm sitting in Kris Krohn's freaking kick-ass studio, people. He gets a special write-off for this building. Even if he wasn't a real estate professional, whenever you rent to yourself, you're out of the rule too. So all these little nuances, folks, that when you start to learn about them, you just geek out. And you're like, this is fun.
I don't know if they geek out or have fun, but I know you do. And you need to have someone that's having fun in this arena. Yes or yes?
Yeah, I love it.
Mark, check it out. Listen, so grateful that you came in town today. In a moment, I want to hear final thoughts and statement from you and remind everyone where they can find you. My final thought for everyone here is Mark said it best. 2023 is a great year to buy real estate. And don't do it just so that you can grow your wealth. I want you to get sophisticated enough to say, wait a second, if I don't know exactly how much money I'm going to have at retirement because I'm just throwing money in a 401k, I'm telling you right now, you're doing it wrong. The average person at 65 has $255,000 between 401k, IRA, annuity, period. That's it. That's all they got. And it's just not enough money. So if you're listening to this and you have a 401k that is a rollover from a previous job, if you have an IRA and it's just sitting in the market and you want to be tempted with opportunities to make way more money and control your own financial future, then you need someone to self-direct that for you. And that's something that Mark does. Yeah. And so he has a company, they've got $2 billion to a tune of what they're actually doing this for. So Mark, if anyone's interested in legal advice, if they're interested in tax advice, if they're interested in just rolling over their money so they even have the option of investing in real estate, any of that, how do they find you and what's your final message?
Probably the easiest website is markjkohler.com because you can, from there,
Mark J. Kohler, Kohler.
Ler.com, markjkohler.com. You can click on resources. You'll get to the self-directed IRA company, the law firm, accounting network, so you can start to build your team and start there. Keep it simple. My final thoughts would be, and I'm going to throw out another next level strategy on the way out. I want to say, just take a little bit what Kris said and change it to and say, tell people the American dream is still alive.
Yeah.
Real estate is a part of it. If you want to build wealth, real estate's got to be a part of the equation. And I would say, Kris, keep putting money in your 401ks, people. Keep putting money in your IRAs. But then once it's there, deploy it where it gets the best rate of return.
Wow.
Go buy real estate in those accounts. And here's the next level strategy, Roth chunking.
Yeah.
Start taking those IRAs and 401ks and chunk them slowly to Roth. And we'll use write-offs in real estate to wipe out the Roth conversion. And people, now you're living completely tax-free.
Guys,
it's insane.
You've heard it from markjkohler.com himself. Mark, thank you for being here today. Guys, thank you for joining us on Have It All. Consider yourself financially abundantly blessed. Mark, appreciate having you here.
Thank you for having me.